Yo, what's going on, beautiful people? In this video, I'm going to show you guys a live day trade from crude oil. Before we jump into that though, I would advise you guys to subscribe if you want to learn how to trade. If you guys have any questions, feel free just to drop them down below in the comment section. I'll be sure to get back to you guys. I love connecting with you guys and helping you guys out. Anyways, let's jump into this live trade video. Hope you guys can learn a thing or two. Sumner Healy out. Alright guys, what's going on? This is Sumner Healy and this is a live trade video of a crude oil trade that I took on September 5th. So this is a little screen recording of what I was looking at, and I'm recording this audio after the fact. So we have a nice parabolic ramp on crude oil. We opened up down here at 6:30 at about 48.60. So we popped about 18 cents from there, but we had a really strong parabolic early this morning. And all in all, we're just on a nice little ramp. And so what I'm looking at here, or what I was looking at here, was we have a resistance level of 48.88. And so I was looking to see how we reacted at that level to possibly initiate a short. And so it wasn't a guarantee that I was going to short this trade. It wasn't a guarantee that I was even going to take this trade, let alone take a short. Really what I was looking at was just to see how we reacted at that 48.88. So let's see how this played out. Alright, so I entered my first position at 7:30, around 48.88 was my average. One contract. I'll throw down a little arrow right here so you guys can tell what I was looking at. So we came up to this resistance and pressed up against it. And I kind of like the action. So we ran past it ever so slightly and pretty much instantly retracted off of that. And so what I was looking is to risk 49s, roughly, thereabout, and see how that reacted there on 49, and entered at 48.88. So I was risking about 12 cents on this trade. And I wasn't gonna take it off immediately. I didn't have a hard stop at 49. My hard stop would have been about 49.10, but 49 was kind of a line in the sand for me. And so it really was an important level to see how we reacted there. All right, so at 7:40, been in the trade for about 6 to 7 minutes, getting a little pull. I'm up about 8 cents, and I'm not totally convinced though that this is gonna be the only move. We're kind of building a base right here, and so I'll pull back to 1 minute. We're building a bit of a base, and I don't know, I'm thinking that we're gonna get a pop. So I'm watching pretty closely as this trade is forming. All right, so I've been in the trade for over an hour now, or just about exactly an hour. So we got this second pop at 8 o'clock, came up to around my entry, pulled back. Third pop, we're testing this area. So this is really the defining moment. If we crack the 49s, I'm gonna have to take the loss on this trade, take my 12-cent loss, walk away onto the next. So this is really a kind of a do or die point for this trade. So we'll see how this plays out here. All right, so we just got a gnarly rip up to 48.98, pretty strong. Still haven't tested that 49 level fully, but right now I'm down about 8 cents on the trade. So this is where you really have to ask yourself, is this doing what I expected it to do? So I originally got into this trade risking off those 49s, and I had no expectations of how it was gonna get there, how this trade was gonna pan out. Of course, this isn't ideal. It's not what you wanna see. On a short, you don't really wanna see this grinding higher low action, but I'm sticking to my risk. 49 is still my risk point. We have a large move, we're at resistance, and so I still think this trade has legs to the downside, but this is why it's so important to have a plan. It's because you can stick through this. You know, you're making higher lows, you're setting up a formation that doesn't look very strong for the short side, but I have risk. I know where my risk is at, and I'm sticking to that plan, and so we're just gonna let this play out. So what happened is we ran right up and almost instantly retraced that move. These are 1 minute candles that we're looking at. So in 4 minutes, we retraced this move, which is pretty weak. And so if you remember, my entry is 48.88. So now I'm 6 cents in the green, and still looking for this to play out. So right there, this is kind of what I call the kiss of death. you had that final jump, it actually broke this resistance and failed. And so that's what happens with the majority of breakouts. Majority of breakouts will not actually see themselves, keep on rising, or even same thing for breakdowns. And so a lot of times a breakout or a breakdown is just going to be a test. It's the market's curiosity coming to play, and you're going to see that happen. And so that's why I don't like just taking it off instantly. I like seeing how is it going to play out there, and just seeing how it works. And so you also have to keep in mind that 49 is a strong psychological number. There's a really good reason of putting risk around a 49 level. It's just a very nice whole number that the market will like to test and either respect or test. So, all right, so it is 10:40. So I've been in this trade for about 3 hours. It was pretty slow trade, and this is why it's important to set your risk, walk away, take a breather, don't micromanage. But I ended up taking a cover here at 48.58 was my cover price. So made about 30 cents or $300 per contract on this trade. And all in all, a really good trade. I was risking 12 cents and we made 30 cents. So about a 1 to 3 risk to reward, a little bit less, but that's what I shoot for in almost all my trades, is at least a 1 to 3 risk to reward. And that allows myself to have bad trades, which are inevitable. And so this is really just the rinse and repeat process that we're looking for. Have a thesis, see if that thesis plays out. I was looking at a short at 48.88. That was my thesis, that if we got to 48.88, we would have the potential for a short, depending on how the market reacted at that level. We got to 48.88, we ran up and we faded off that green candle and then proceeded to fade. I took the short on that, was risking 49s. We fumbled around here, we did a little coagulating, and then popped, tried to break out, didn't reach 49s, and then faded. And so this is pretty much the story of most good trades. Most good trades are boring. They're boring as all heck. They just grind and chop, and eventually they'll get to your target. Rarely do you get the big rip or the big flush. And those are nice and they do happen, but it's not the status quo. So you really got to learn to build patience and just believe in your trades and set risk and be okay with that risk and let it play out. So anyways, guys, this was a quick $300 in about 3 hours per crude oil contract. Hope you guys enjoyed this video. If you have any questions, feel free to drop them down below and I'll get back to you guys as fast as I possibly can. I'm here to help, and I hope you guys got some value from this. All right, take care.